A stock market crash is a sudden and dramatic decline in the prices of stocks. It can be caused by many factors, including economic instability, political unrest, or even natural disasters. While it's impossible to predict when or how a stock market crash will happen, there are steps you can take to prepare for one. Hello everyone, welcome to Finance Wisdom Channel. If you're new to this channel, do like and subscribe to the channel. In this video, we will talk about how to prepare for a stock market crash this 2022. Please note that none of this information should be construed as investment advice. Please consult with a financial advisor before making any decisions about your portfolio. Now let's get started. How to prepare for a stock market crash number 1. Educate yourself on the stock market and how it works. A stock market is a collection of markets where stocks, pieces of ownership in businesses, are traded between investors. It usually refers to the exchanges where stocks and other securities are bought and sold. The stock market can measure the performance of a whole economy or particular sectors. For example, the Dow Jones Industrial Average, or DJIA, is a stock market index that tracks the performance of 30 large companies listed on the New York Stock Exchange, or NYSE. The stock market can be volatile so that prices can go up and down rapidly. This can happen for several reasons, such as economic news, political events, or changes in interest rates. When prices go down, it's called a bear market. When prices go up steadily over time, it's called a bull market. Investors watch the stock market closely to try to make money from buying stocks when prices are low, called buying on the dip, and selling them when prices are high, called selling on the bounce. How does the stock market work? The stock market is a way for companies to raise money and investors to make money. The prices of stocks are constantly changing as people buy and sell them. When a company wants to raise funds by selling stocks, it hires an investment bank to help it. The investment bank will help set the stock price and find buyers. Once the stock is priced and available for sale, anyone can buy it on the exchange. Investors buy stocks hoping to go up in value so they can sell them at a profit later. How to prepare for a stock market crash number 2. Have an emergency fund saved up in case of a market crash. When it comes to investing, there are a lot of things that you can't control. The stock market is unpredictable and ever-changing, and there's always the possibility of a market crash. That's why it's essential to have an emergency fund saved up that you can access in case of a market downturn. Your emergency fund should be enough to cover your living expenses for at least 3 months. That way, if you experience a sudden loss of income, you'll have some time to adjust and figure out your next steps without worrying about how you'll pay your bills. Saving up an emergency fund can take time, but it's worth it in the long run. Having that safety net in place will give you peace of mind and help you weather any financial storms that come your way. How to prepare for a stock market crash number 3. Diversify your investments across different asset classes. When it comes to preparing for a stock market crash, diversification is critical. This means investing in various asset classes, including stocks, bonds, and cash, by spreading your investments across different asset classes. You can reduce your overall risk and improve your chances of weathering the storm. For example, if the stock market crashes but the bond market remains strong, your portfolio will still be in good shape. Of course, diversification is only one piece of the puzzle. You also need to ensure that you have a solid investment plan and are comfortable with the risks you are taking. But if you can diversify your investments and stick to your project, you will be in a much better position to weather any future stock market crashes. How to prepare for a stock market crash number 4. Be aware of economic indicators that could signal a market crash. Several economic indicators could signal a market crash. One is inflation. If prices rise too quickly, it can lead to a loss of confidence in the economy and a sell-off of assets. Another indicator is rising interest rates. This can make borrowing more expensive and reduce the money available for investment. Additionally, high levels of debt can also lead to a market crash. If companies or consumers have too much debt, they may be forced to sell assets to meet their obligations, which can cause prices to plummet. Finally, geopolitical tensions can also trigger a market crash. If there is unrest in a major trading partner or supplier, it can disrupt global markets and lead to panic selling. While no one can predict the future, understanding these indicators can help you make informed decisions about your investment portfolio. Don't forget to like and subscribe to the channel if you like this video. How to prepare for a stock market crash number 5. Be prepared to make some sacrifices if the stock market takes a downturn. No one likes to see their investments lose value, but it's important to remember that the stock market constantly fluctuates. While it's impossible to predict when a downturn will occur, there are specific steps you can take to prepare yourself financially. First, ensure you have an emergency fund to cover unexpected expenses. These will help you avoid selling off investments at a loss to pay your bills. Second, review your portfolio and identify any holdings that may be particularly vulnerable in a market downturn. You may want to consider selling these positions before they lose too much value. Finally, remember that a downturn doesn't necessarily mean it's time to panic. Many investors find opportunities during market corrections and come ahead in the long run. How to prepare for a stock market crash number 6. Stay calm and don't panic during a stock market crash. A stock market crash is a sudden, sharp decline in the value of publicly traded stocks. While it can be frightening to see the value of your investments plunge, it's essential to keep calm and not make rash decisions. During a crash, the prices of individual stocks can fall very quickly, and it can be tempting to sell to avoid further losses. However, this is often the worst thing you can do, as selling when prices are low will only lock in your losses. It's important to remember that the stock market is volatile by nature, and crashes are a normal part of the cycle. The key is to stay calm and wait for the market to recover. Over time, it will rebound and your portfolio will likely grow again. In the meantime, focus on your long-term goals and don't let a short-term dip in the market derail your investment strategy. How to prepare for a stock market crash number 7. Keep track of your portfolio's performance during a stock market crash. There are several ways to do this, but one of the most effective is using a portfolio tracker. These tools allow you to see how your portfolio is performing in real time and provide historical data that can be used to identify trends. This will help you make informed decisions about when to buy or sell and give you a better understanding of the risks involved in investing. Although we cannot predict when the stock market will crash, it is essential to be prepared. The tips that we have shared in this blog post should help you get started on preparing for a potential stock market crash. We advise you to take action now and not wait until the last minute. Remember, it is always better to be safe than sorry. Have you started preparing for a stock market crash? If not, what are you waiting for? Thank you for watching. I hope you have learned something from this video. If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.